Good afternoon, students. So, today's topic is cash flow statement. What is a cash flow statement? But before we do what is a cash flow statement, first understand what are the different types of statement. The different types of statement are balance sheet, it is a statement. Profit and loss has also become a statement now. And one more statement which the company prepares is cash flow statement. These three statements are very important statements. With balance sheet, we get to know the assets and liability position of the business. With statement of profit and loss, the organization, the company comes to know about the profitability, the loss or profit in the accounting year. And with cash flow statement, the organization comes to know what is the position of cash, whether the cash inflow is more or outflow is more. That they come to know. Now, we have the meaning of cash flow statement. Cash flow statement is a statement which shows the inflow and outflow of cash and cash equivalent from operating, investing, and financing activities. Again, I'll say, so it is a statement which shows the inflow and outflow of cash. That is, cash is coming in the business or cash is going out of the business. Not only cash, cash equivalents also. That means which are treated as cash. They are called cash equivalent. We will deal in detail cash equivalents. And through this cash and cash inflow, cash and cash equivalents inflow or outflow through operating activities, that is purchase and sale and other direct activities, through investing activities, that is investing in some other shares, some other companies' debentures, in fixed deposits, or investments, or the inflow or outflow through financing activities, that is issue of shares or debentures, providing of dividends, interest, etc. These are all the three activities. So operating, investing, and financing are the three important activities of cash flow statement. And cash flow statement measures what? It measures just the outflow and inflow of cash and cash equivalents from all these three activities. Let's understand the importance of cash flow statement. Cash flow statement shows sources and application of cash and cash equivalent for a period, suppose an accounting year. Thus, it helps to plan investment, operating, and financing required requirements of an enterprise. Thus, it helps to plan investment, operating, and financing requirements of an enterprise. Through cash flow statement, one can easily understand what is the need of cash and cash equivalent to invest, to operate the business, or for financing activities. Let's understand the comparative study. The other importance of cash flow statement is to make comparison, a study of comparison. Which one? A comparison of cash flow statement with budget shows the extent to which cash generated and applied met the plan. So whenever we are matching the cash flow statement with the budget which we have already prepared before, then we can understand that what are the different differences. Okay, that comparison of CFS with the budget shows the extent to which cash generated and applied met the plan. Preparation of cash flow statement. Let's prepare the cash flow statement. Based on the accounting standard 3 issued by the Institute of Chartered Accountants of India, we have to prepare our cash flow statement. Cash flow statement, as we have already understood, has been divided into three different activities. They are inflow and outflow through cash from operating activities, that is profit is coming in the business or not, inflow and outflow from investing activities, and inflow and outflow of financing activities. Now, when I'm talking about inflow and outflow, what is the meaning of this? We say cash inflow when all transactions that lead to increase in cash and cash equivalents are classified as cash inflow. And when the transactions that lead to decrease in cash and cash equivalents are classified as outflow of cash and cash equivalent. That means lead to decrease in cash and cash equivalent, it will lead to outflow. Next, we have a sum on cash flow statement. This is the overall sum, students. Overall, we have sums based on operating activity, investing activity, financing activity. But this sum I have taken as an overall sum, the entire scenario. So the sum is given, calculate the cash flow statement. What is written over here? We have to first calculate the operating activities income. Second, we have to calculate the investing activities income. And third, we have to calculate the financing activity. So we have three different activities through which the inflow and outflow can take place: operating, investing, and financing. When we will add or when we adjust operating, investing, and financing, what will we get is inflow of cash and cash equivalent, inflow. When we add opening cash and cash equivalent, we ultimately get closing cash and cash equivalent. So one more important note is that at closing cash and cash equivalent, less opening cash and cash equivalent is always equal to cash flow from all the activities. So let's do a sum to understand this all. This format only we have to follow. This is the sum: inflow from operating activities 1 lakh, outflow from investing activities 1,50,000, inflow from financing activities 1,20,000. This nota bene was so very important, students. Closing cash and cash equivalent, when we subtract opening, we get cash flow from all the activities. Okay, very good. Cash inflow from operating activities is 1 lakh. Cash outflow from investing activities is outflow now, this one. 1,50,000. Cash inflow from financing activities 1 lakh, and opening cash and cash equivalent given 1 lakh, and closing cash and cash equivalent given 70,000. Clear? This is the sum altogether. Now to do the sum, we have to first make the format of cash flow statement. The format looks like this in the books of Asset Limited. Suppose in the books of Asset Limited only the sum is, and they have asked to prepare this one, cash flow statement. So this is the sum, and we have made the format. Prepare cash flow statement in the books of asset. Okay, good. Okay. So when we are preparing, students, what is happening is that when we are preparing this, we have this format. So we have written cash, particulars, amount. Cash inflow from operating activities given 1 lakh. We will add cash outflow from operating activities, that is minus 1,50,000, and cash inflow from financing activities is 1,20,000. So when we are solving it out, 1 lakh minus 1,50,000 plus 120, 70,000 written over here. This is known as net increase in cash and bank balance. By adding all these three, we are saying that it is increase in cash and bank balance. With this increase in cash and bank balance, when we will add the opening cash and bank balance, cash and cash equivalent, it will become 1,70,000, and that is nothing but closing cash and cash equivalent. Okay, that is nothing but closing cash and cash equivalent. 1,70,000 done. Hope you all have understand closing cash and cash equivalent and opening cash and cash equivalent. One more note we can write over here, that if we subtract closing minus opening, directly we will get the increase or decrease in cash and cash. increase and decrease, increase or decrease in cash and bank balance. Okay, students, this is your homework. Prepare cash flow statement in the books of of asset limited, a company, and you have to do this sum. Thank you, students.